tryna take it down, place for you just scoring minds, best of bar.
All right, ladies and gentlemen, I got your watch list coming into January 21st, 2020. And with earnings season right around the corner, I got two stocks that are going to go crazy, and they're both earnings picks. So I want to go over these plays. I want to talk a little bit of the strategy and how I'm going to be playing with them. I'm also going to go over some of the trades we made on Friday. I'm still expecting a few gap up and big runner plays tomorrow. And overall, I have a lot of stuff that I want to watch, and we even need to talk how to approach this earnings season. You guys will go to your Thinkorswim. You will start seeing a bunch of companies now getting that blue light bulb. Their earnings are coming up left and right, so I hope you guys are ready. So I'm going to go over all that stuff, go over the keys, and then talk about what plays we're going to be looking at and what main earnings. I am going to need a special favor from you. I need to make sure you guys do the most important thing. Post your watch list below. Let us know what you're looking at. We're going to go over these in the morning, but this is very important for earnings. If I miss any of these, call them out. And the one biggest tip I could give you guys for earnings, always verify the earnings date through the company. You will see different dates on TD Ameritrade. You will see different dates on E-Trade. Even the website I like to use, and this is how you guys can stay ahead this earnings season, it's earningwhispers.com. You go up to the calendar, make sure you hit both of these where it says, oh, this is before market open or after market close, but sometimes these sites are wrong. So make sure you guys go there, and that's what I'm saying. If I miss any earnings, if there's something out there, let us make sure we source that info, baby. So besides that, though, make sure you guys drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We will see you trading live every day this week. All the earnings, on the big earnings, we will be broadcasting Netflix live tomorrow. So hang around after hours. We'll do some interpretation, all that, and then starting March 1st, the code, baby. Ooh, we get the benefit with the news. But let's get right into it. As far as the keys go and starting off, earnings is going to start, so some things are going to stop. And again, understand what we've been talking about, what we keep bringing up. They're going to move in packs. I'm going to be very generous right here, and I'm going to tell you the other play. Netflix is the first play. We have a unique way to play it with the strategy, and then the next play is going to be Intel. But why I'm bringing that up now, I'm giving it to you right off the bat so you understand this. The stocks are going to move in packs. Once Intel reports, you're going to see AMD move prior and then after the report as well. Same thing with NVIDIA, Skyworth, Qualcomm. You guys remember, we already saw Qualcomm break out. We put that on the watch list last week, so get ready. They're going to be moving in packs. So again, this week is where the earnings start to come up. It's going to be a little bit slower, but starting after this week, again, it's just going to slowly start picking up speed. But I want to make sure you guys don't miss this and start keeping your eye out for the names you want and call them out. We even made a Texas Instrument play on Friday. This is what I'm saying. I am seeing stuff with the option chain. I will go over it, but pretty much after Netflix earnings, some of the prices are going to change drastically, believe it or not. It's kind of like a checkpoint for earnings starting. So again, you saw what plays we were able to make last earnings season. We got that Netflix condor, then things kind of just, the prices, you couldn't have got anything like that after a report. So this is what I'm saying, is just keep your eyes out for it. Right now, the positioning and the pricing on the option chains, they're not too overinflated, so we could set up these moves and get prepared. But that's the main thing you guys need to be watching out for. As far as anything news related, we are still going to watch for stuff with Iran and all that, but the biggest thing right now is the impeachment is still going on. So I'm expecting a 3 to 4 week process. Again, you're going to have the State of the Union. That's what people are talking about. Is it going to meet up with the State of the Union? Or again, even after that, there's also the primary elections, believe it or not, which will be a few months after. So people are expecting this to be a short process. If it drags on longer, they introduce new stuff. Again, depending on what happens, this still has the potential to be a black swan. At this point, it's going to be a gray swan because people aren't expecting much, but I wouldn't be surprised to see the market react to this in some way, shape, or form, maybe a little drop and then have a crazy bounce, a goodbye the dip opportunity, who knows. But that is just one of the main things to be looking out for here. And then finally, with what I was saying with these earnings and them moving up as packs, use this opportunity with this being a slower week to catch up on the strategy videos we posted this week. We talked about growing a small account, spreads and events. Earnings is an event. I made a follow-up video on credit spreads so you could understand them. This is your time to get familiar with those. You could even search our video, turning $160 into $1,600 on Tesla. That describes the earnings criteria strategy, which you might have heard us talk about. But you want to catch up with that stuff now as opposed to getting it and trying to ask, oh, what's this, what's that, while we're right in the middle of the earnings season. So get on that, and especially understand the credit spreads. That'll help you understand the benefit of iron condors, which is essentially selling two credit spreads at the same time, but that is opening up an opportunity for plays. This is why I'm saying get used to this and get familiar with our strategies, because you're going to hear me talk about this a lot. Pretty much it's really going to go like this. If a company meets the earnings criteria and it makes more sense, and we say, hey, we agree that the option chain is wrong, or that the option chain in the market is pricing less of a move that could potentially occur, and we could do so at a cheap price, we are going to buy those options and we're going to make that play on both ways. If not, and if we're saying, well, the option chain's pricing in a lot and we agree with what the option chain says, it doesn't mean we don't play it. It means we sell a condor or we sell a credit spread to match up with the market and collect the premium instead of buying into it. That is going to be the epitome of how all of these plays are going to move. So if you understand that, you're familiar, we can spend more time finding the plays and scanning the chains, baby. But even then, even if you're new, ask questions, don't feel free. Again, help everybody out, be positive and respectful. That's all we ask, right? So hold it down, Cole. But besides that, this is where I'm going to need your guys' help as well, too. If you see any other plays, you guys could call them out. But this week, we're going to have Netflix earnings tomorrow. Then you're going to get Procter & Gamble, and the airlines are going to be on Wednesday morning. And those, again, airlines include Southwest, Delta, American, all that. So that could be something, and I have a secondary place to watch out for that. Procter & Gamble is going to be a good one as well. Then on Thursday, I believe we're going to be getting Intel, and then you're also going to get some finance. I think this is going to happen on Friday morning. I'm not sure. AXP. There's even going to be like Synchrony Financial and then NextEra Energy. But the main ones I want this week are going to be Netflix and Intel. Procter & Gamble, maybe some of the airlines, but I'd rather play a sympathy play through the airlines, which I'm going to show you here. But other than that, we will talk now about the top two plays. So I want to look at Netflix. I found an iron condor that you could do. It all depends on the pricing. Again, we will make this trade tomorrow, so be there on stream or make sure you get your scream alerts. But explaining the logic here, I'm a little bit more conflicted. So what I think I might do actually both strategies. It's hard to see what the option chain wants, but essentially the option chain is pricing in a $25 move on Netflix. And again, that is by taking the at-the-money prices. And what that means is pretty much adding together the premiums to see what the market is actually looking for. But if you guys have Thinkorswim, you could just enter in the stock and you see here, come here, you see this plus or minus, or right here it says plus or minus. That's market maker expected. This is telling you that exact metric. So if you don't know how to add it up yourself, it's good to understand, but you can see that there on Thinkorswim as well. So they're pricing in a pretty good move. If you think about it, $23. It's just a little bit less than 10%, I'd say. Probably like a 7% move. So that's a big move. The key with it, though, it is pricing the full standard deviation almost. So again, it is expecting a big move. The problem is, though, if you go to the January 24th on the weeklies, if you wanted to get through, you'd have to get 3 standard deviations to get a play that's $50, and that would be pretty much be a $80 move. So, the only way you're going to get in this cheap is if Netflix does move surprisingly more. So what I think I'm going to be doing is I'm either going to be going for an iron condor. That's what we played last time. Again, the premium's really high. The condors are paying out a lot of money. So I'm thinking of finding a way. The best ones I found have been so far in about a $10 range. The goal of a Netflix credit or iron condor is try to get $2.20. That is pretty much the sweet spot. That means you could sell an iron condor, risk $30, get $220, but the difference is if you're getting that high credit to collateral, it should be a 10% probability play, but you'll be able to finesse those with a 30 or 40% probability, believe it or not. So in this case, the ratio, it gets tricky a little bit, but I'm going to be watching that play. I'm going to be looking to do that. And then the next play I'm going to be looking at is going to be Intel. So the good part about Intel is it does meet the criteria. It's pricing in just under 75% of one standard deviation, but you could see that in the chain. It's pricing about 370 both ways. So again, they're not a big mover. 370 is again, that's like a 7% move on the stock, but the option chain on Intel, you could go 2 standard deviations out the money, and that's pretty much anything higher than $64 is around a standard deviation, or again, add that $3 to the current price. But Intel's not supposed to move a lot. This one probably wouldn't be as good for the iron condor, but it meets the strategy, so I think I will make a play both ways on those. Our 2 options are getting them tomorrow, or we could get them the day of. So either watch on the stream or we'll cover these online. But I like it. Again, they're going to be the first one to move. They've had an incredible just year so far. think about how they've moved relative to everything else in 2020. You guys saw NVIDIA, you saw AMD, you're even seeing Qualcomm. So Intel's at an interesting spot there, so they could actually surprise with the earnings. But if anything, I'm going to play both ways for now, and that's the crazy part too. We have to see what happens in the morning. All of these prices could change, but I like those. Besides everything else, I mean, I guess, well, let us get into the plays. I forgot that. I forgot to say that. But I'm also going to be watching Amazon. They're going to be one again. We're waiting for them to do the dance. They've been lagging a little bit, but we'll see what happens with Netflix. Also be watching Facebook. That could be even a good one. We set up a play last week, if you guys remember. That play's still in there. But now the other play that I like for some of the earnings this week, these are those sympathy plays. The real one's going to be Expedia. So if you guys remember, they had that earnings. They're back to where they were. Expedia's been in the middle of this. They're probably going to have a big one. So they might respond a little bit to the travel and airlines. But then we're going to, in the market, we'll probably make a move off there. But they're going to have their earnings here in a month or two. But watch them, even watch Booking. I'm going to be interested in both of those. You could watch Southwest and all those. I usually don't play the airline. Besides that, though, you watch Johnson & Johnson. Again, this will be a sympathy play towards Procter & Gamble in the morning. Same thing even with Walmart. They're going to be a good one to watch again, like we've been saying with the value stock rotation. I'm going to keep my eye on for them. But finally here, or I forgot to mention this one. This is the play we made last week, so I will give my prediction here. You guys know, this is not a recommendation. Option trading, shooting risk, you can't lose all number of financial. Please use all financial advice, educational purpose only. I'm just throwing it out there. If I'm wrong, I'm wrong. I did make a play. I did 2 different credit spreads on these last week, and we're still holding that other credit spread that we got last week too. If you guys remember that one, the 105, 110. So that one's actually still working for us. It's actually going to do us a little bit better here. But I think Beyond is going to gap up tomorrow. I pretty much my thesis is if Beyond is going to start running up, and this was just kind of the pullback, it would pretty much start this week. So I did make a bet on that, but I did make sure I got time, and it even covers earnings. There was one that I got for $1. We did, so I spent $100 on it. It was a January 31st, 148 call, sell the 180. So that's like, it was like $100 to $5,000 max reward, something around there. And then the other one I sold was, and this one I got for dramatically cheaper. This one was like 40 or $50, a 175, and then sell the 210. So super far out the money. They do cover earnings, but again, these plays are just like we played them last week. We're hoping that if it does make this run up again, we're playing that extrinsic value run up. So watch Beyond. I think that's going to be a good one. Same thing too. We're in that one that expires this week. Those Shopify's. Again, this is going to be a slow mover, but watch out any of the rotations. If we see that, like I said, when earnings start, something stop. It's a great time for both rotations or things chill out. So I want to see how the big name movers like Shopify or those big, really volatile ones like Shopify and Roku move. Then finally, AMD and NVIDIA at the same logic here with Intel and the chip makers. Like I'm saying, they move in packs. These guys are going to be moving. So again, we still have that AMD. Remember, we did that last week. We're doing the same logic. You guys are seeing every time it's held up here, and then now we're getting the earnings. We still have that AMD. So we're up about 47%, and we're still in that Microsoft. I haven't ghetto spreaded those, but we still have the one for this week. We have that 53 call. So we'll see. Depending if AMD does good or after Intel earnings, that could be good. But also, that being said, remember, this is going to be a short week. It's already the 20th. Tomorrow's going to be the 21st. So just keep that in mind. But then finally, watch Snapchat, baby. Oh, the cult favorite. It's like, isn't it crazy how Snapchat's just a stable stock? It doesn't even move as volatile as everybody else. Like, look at this craziness, man. Oh, poor stocks, man. They're so volatile, and Snapchat's over here just stable as gold or something. Okay, baby. Don't take that too seriously. But watch Snapchat. Watch how they hold up. Again, this is a crucial level. They have earnings around the way. We still have to wait. Oh, well, we could add actually more here in a week. Maybe I give myself a margin loan to buy more, but I think I'm going to do it based on timing and just wait and space it out. But watch Snapchat again. Contracts get cheap. That could be a good opportunity. Then finally, though, the last industry I don't want you guys to forget about is going to be banks. Watch Bank of America. Watch JP. Remember, they already reported, so let them have this run up or continuation afterwards. But keep an eye on those, especially as some of these companies start to report. And usually, if the market doesn't do anything, you'll watch they're waiting for earnings. Watch out for transports. Watch out for the banks in certain industries to kind of be the ones that carry the weight because they still have big weighting with the S&P. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning, and make sure you're ready for earnings, baby. You need to control those budgets. You need to get ready and get up to date with all of the strategies. Take it slow. Don't force it. You got to control the YOLO. Get that armor on, baby. Tell me what's in your hand. Tell me you're going to do it anyways. Flip the switch. It all comes in right now, baby. Let's go.